parts they want.
Welcome back, everybody. Technology companies have been increasingly under fire by regulators for privacy and security violations. But our next guest sees plenty of reasons to still invest in technology. Joining us to talk about what's working in the sector is Sandip Bhagat. He is with CIO at Whittier Trust. And Sandip, thanks for being here today. It's good to see you.
Great to be here.
Let's talk a little bit about all of these regulators. We just watched video of Mark Zuckerberg answering questions on Capitol Hill, meeting with President Trump. These regulators seem like they're ramping things up, and it's not just here at the federal level, it's at the state level, and it's overseas as well. Are you concerned about any of those that are actually in the crosshairs, or do you look and say there are companies that aren't being as closely tracked, and that's where you should go?
So let's talk about the regulatory risk, and I'll close with some still compelling reasons to look at this sector very closely and very favorably. So you are right, even the scope of this regulatory oversight is changing. People used to focus on just consumer welfare and a price effect. That has now expanded to what harm you're doing to competitors and non-price effects. So you are right, the scope is expanding. And some of these companies, and this is the Google, Apple, Amazon, Facebook, they have engaged in kind of favorable treatment of proprietary products. When you talk about regulation, you have to talk at two levels, privacy first and then antitrust. Privacy may not be such an issue, and in a very perverse way, the large players here may actually come out winners because they have the scale to absorb the cost of meeting that regulatory compliance. They're also multinational in nature even today, and so the experience in Europe, where GDPR is already in place, will stand them in good stead should it come to the U.S.
But what about Facebook? Zuckerberg yesterday getting asked questions like, would you just get rid of WhatsApp and Instagram just as a sign of good faith? Would you spin them off? I mean, that's a U.S. regulator asking.
Yes, absolutely. Now we're switching to the antitrust component of regulatory risk. And one of the things that is being discussed is our anti-competitive acquisition. So I think they would come under attack. What happens in the worst case? There is a forced breakup. We put a very low likelihood for that outcome, but fines will come along the way. There'll be rulings that say you give equal parity during search processes and displaying of third-party vendors and their products. All of those we think can be absorbed by these companies because they have free high cash flow margins.
So would you say buy Facebook, buy Amazon, buy Apple, buy Netflix, buy any of those stocks because any potential regulatory effect has already been worked into the stock and the stocks are undervalued as a result? Stocks
are reflecting that, but here are two really compelling reasons to think about technology stocks now and really for a secular future. One is macro in consideration, the other one is micro and fundamental. At a macro level, what is the environment? We have seen slower growth than normal after the global financial crisis, and as a result of that, interest rates are lower. Slow growth and low interest rates help growth stocks. When growth is scarce, growth companies get rewarded with a higher multiple, and low interest rates help growth stocks because they have a higher equity duration and sensitivity to interest rates.
Let's very quickly run through your top picks. One of them is Microsoft, which, by the way, is not in the crosshairs this time around.
Yeah, and so Microsoft is, there is one takeaway, it's a stock to own for the long term. It's a great way to compound wealth. It's indeed a vehicle for intergenerational wealth transfer. The company has rediscovered itself, moved away from a licensing model to a subscription model. Satya has reformed the company, and while they're making inroads in cloud computing, they're actually very unique in that they can play in the hybrid cloud solution space with a foot in on-premise software along with cloud-based application deployment.
What about Amazon?
Amazon has just competed. Its economic mode is based on scale, convenience, and brand loyalty, which doesn't get talked about much. People talk about the technology backbone of Amazon, but that brand loyalty, they've been able to convert that into greater user engagement and adoption, and then monetized it with more and more transactions to gain a bigger share of the wallet.
Sandip, thank you for coming in. It's great to see you.
Yeah, likewise.